one person right now. So Marilyn, thank you for attending. But let's get rolling. All right. So obviously, you know who I am, Marilyn. And and I could probably say this right now because you're the only person right now in here besides my ladies. We are starting a lender and it will be launching April 1st. So that will be something that's going to be exciting. This company right here, I'll be no longer working for. And I will be starting my new venture April 1st. So that's the exciting news. We'll talk to you later on that. Our promise is that every deal is like a snowflake. So basically, all these deals that we have need to be treated with respect. There's a lot of deals that we're finding right now, a lot of borrowers that are concerned if they qualify, and we're seeing that more than often now with these crazy times. So we will definitely make a promise that every deal that you send us, obviously, we will obviously figure out a way to get them to qualify, and that's the objective, is to have them qualified. It's concerning because right now in a market that we see, I want to share this stat, which I saw the other day. Over 64% of the population right now is living paycheck to paycheck. Now, granted, you've got Miami that's catapulted, and equity levels are soaring. But when I look at this, 48% of people that, and I just had this conversation, ironically, this morning with my father. I said to him, I think I need to go into the luxury market at this point. It's being very concerning here. I top originator, closed almost close to 100 million. I did very well, but we have taken about a 40% decrease in buyers. And I just shared this with Melinda as well. I was like, hey, how's everything going? She's like, amazing, because she's doing the listing side as well. So she's got buyers and listing side, but 48%, that's 50%. All right. So people that are making 100 grand are not qualifying for mortgages. Okay. And they're living paycheck to paycheck because they want to purchase, but they can't purchase because they don't have the funds to purchase. So these are stats that I wanted to share because it's not the end of the world. This happens every 7-10 years. This happened in 2009, happened in 74, happened in 84. Recession. Could there be a recession? Who knows? There's talks about it. Feds today will announce that rates will go up a quarter. So, it's becoming very difficult to purchase homes. Now, when you put yourself in an environment like Miami or Broward County, all the way up to the Tri-County area, Palm Beach, it gets very concerning because, you've got these professional blue collar workers that are making well over six figures. But when you consider student loan debt and you consider their debt in general, that hardly makes them qualify for something that's listed for 600,000, right? And Lennar and DR Horton building these beautiful homes that are starting literally at 500,000. So it makes it hard for us to sit down and analyze this. And this whole presentation is based on our roadmap to home ownership and how we can get people into houses. Okay. The rents, as we're all aware of, are going up. All right. So these are things that we want to basically, not be negative about it. And we don't want anyone to be concerned about it as well. But, if someone calls us, and we get tons of calls, and they're basically questioning the fact that, hey, I think I'm going to just continue renting, I would humbly disagree with them. And I would start doing some calculations with them. Now, we've got cheat sheets that have a simple calculation. In fact, I will make a note for myself to send this out. And the cheat sheets are important, right? Because the new person that started, Sam, he's using cheat sheets to his advantage. And basically, this is allowing people to see the light, at the end of the tunnel, and saying to themselves, okay, this is the issue that we have. But we can address the issue, and here's how, right? And so the cheat sheets are they're fabulous, and so it gives them a visualization to physically sit down with their significant other and to say, all right, honey, we can do this. This is how we can do it. Okay. Everyone's going through challenges. Everyone has crazy stuff happen in their life. It's part of life, right? But at the same time, it shouldn't allow you to hold back. And like I was telling my mentors, a gentleman who passed away about a year ago said to my father that I should open up my own lender. And I laughed at him and said, there's no way in hell. This was Countrywide days, 20 years ago. This was, there's no way in hell I'll be able to do that. And today, you know, we're 2 weeks out of doing that. Okay. So was I fearful? Absolutely. Was I scared shitless of what's to come? Absolutely. Am I putting all of my eggs in all of my, you know, in one basket, which is my life savings? And if it fails, I have nothing. I literally will be on the streets. Yeah, I'm doing it. It's literally everything's on black. Okay. And if it hits red, I'm out of luck. So I'm not the type of person that says to anyone that it's going to hit red. I know I'll do it. I know I don't care. You could say recession. You can say it's the end of the world. Doesn't matter for me, man. I will still find a way to make it work. That's who I am. And this is this slide right here. We are talking to clients on a daily basis that have concerns. And the issue that we have in our industry is that people are fearful. They're uncertain. There's misinformation. They're receiving too much information. They're on Google, almost like WebMD, and they're becoming hypochondriacs by looking at so much information that they're opting out. We can't do it. There's no way we could do it. And so when they have a lack of information, the problem stems that they're opting out, meaning the borrower or the real estate agent is not informing them of what they should do. Now, we're not psychiatrists, but at the end of the day, we all joke about it because we act as, you know, a psychiatrist. It's all over Instagram, you know, that we're laughing at gas prices, and, you know, we're making memes on, you know, becoming a buyer's agent, and you'll have gray hairs before you know it. But the reality is it doesn't have to be this way. And so the biggest thing that I look at is your upbringing. I deal with a lot of clients right now that are listening to their folks, right? And the problem is that their folks purchased 20 years ago or 10 years ago. And that is an issue, right? And, you know, father figure and mother figures telling them that they need 20% down, and, you know, the millennials don't have 20% down at this point, or, you know, like we just saw on the other slide, they're doing very well, but they don't have 20% down. So does that mean that they can't purchase? No, it means that they could do 3% down. They could do 5% down. Okay. They could still remain in a conventional product, but nobody's given them that information, nor is anyone in the family really shedding light on the situation. Well, I got a 2%. What are you getting? You're getting, you know, part of my French screwed here. 4.8 is ridiculous. 4% is too high, blah, blah, blah. So everyone's keeping up with the Joneses, but they're also concerned about what they're getting, because everyone wants to be the attorney in the family or the CPA or Mr. Know-it-all. All right. And we all have that. All right. And you guys are probably laughing, thinking, you know, that's obviously true, because it is true. And these are things that every single person in a family is going to look at. All right. So fear of pressure is really the biggest one. They're pressured of making the payment. They're pressured of, if there is a recession, can they afford it? They're pressured of spending $100 a month to know that they need to do that in order to excel in their job career, but they're not doing it. Okay. So this is the meat and the potatoes of what we will go into. Rent. Here's what's rent looking like for 1 to 5 years, all the way up to 15 years. All right. So this right here is a rent schedule, and this is the amount of earnings that you're really just dumping into rent. Therefore, if you amortize it over 15 years, you've, you know, dropped almost $540,000 down the drain. That obviously could go into an asset that is more than likely going to be the best asset in the next 10 years, because I to each their own, and you can agree to disagree with me, but I was never the person to put money in a 401k. I have money in my 401k and I do max it out. But now, after seeing that I just took a massive loss, and I already took a loss 2008, and my Bitcoin has gone down. I really am skeptical at the fact that, look, I think everything should go into real estate. And that's just me, but I'm the black sheep of the family, and everyone in my family does a financial consultant. So they would humbly disagree on that. But when you look at these, when you look at these charts, you're seeing an absurd amount of money that's going down the drain right now. And we want to make sure that we're being mindful of the situation. We also want to encourage the information that we should be shedding light on our borrowers with, and saying, hey, look, this is the amount of money. I wanted you to see this. Oh, I know what it is. Well, no, let's take a look at it. Let's literally look at it and just take a glance at that. I mean, 5 years, 90 grand, it's a lot of money. Okay. That's an absurd amount of money for some people. Okay. A lot of the things that we send out, okay, are basically emails that go out to really inform and educate borrowers. And so all of this stems from informational brochures, informational emails. We call them sequential emails in our tech world. So every movement that is made by a borrower, we target them. And it is creepy. Okay. I'm not going to lie, but we are all being targeted through Facebook and Amazon. And in fact, Amazon just linked up to my new OLED TV, which I didn't want. And now that damn thing's probably reading everything that I'm watching and viewing. And that's part of life at this point. So everything that we do on our tech side, I literally look at all this data night and day. I've got a team that analyzes it as well in the Philippines, and we target the individuals that have issues going on. All right. And so when I get on, stage and I talk about there's no way that we can't close a deal, I don't want to hear that. There's always a way, and every deal can be closed. Marilyn, you obviously have worked with us. So you and I have had some serious deals that we've closed, and they were challenging. And obviously we want to address the elephant in the room, but we had a roadmap. All right. And we gave them a roadmap. So what you're seeing right here is a simple, very simplistic chart that shows the consumer, which would be the borrower. Look, this is the waiting period that I would need in order to securitize a VA, FHA, USDA loan. Okay. And so sometimes people need to see it. For me, I need to hear audio to retain it. For me, I need to look at YouTube videos to understand how to fix it. For me, I need to visualize something to hit a goal. Okay. But to each their own. People are analytics. Some people don't need that. We believe in sending this material out to borrowers. We also educate them on credit scores. So a lot of this facade of we need immaculate credit to purchase a home, the rates are going up like gas prices at this point. All right. And it's insane. Like I've never seen, I mean, the feds have announced, they're going to announce today, but prior to them announcing, they went from 3.7 to 4.7. Right. So we are literally in a retail world of 4.7, wholesale world about a 4%, 4.1. And so a lot of people are pushing out a wholesale. But the point I'm trying to make, guys, is that to be fixated on credit and to have this fixation that I got to get good credit, I got to get good credit, the borrower's going to end up literally missing the boat by 1%, because to better the situation costs money, right? So if they don't have the money, well, now they're depleting their money in order to fix their credit. That's the down payment money. So this is, I'm telling you, this is what we talk to clients all damn day about. I don't talk about loans. I don't talk about any of that stuff. I talk literally to them about trying to get them situated and reinforcing a registered nurse making $110,000 that doesn't have student loans but has debt, and then we now need to figure out her credit. She's got $20,000 in the bank, a 401k of maybe $50,000. That's a good deal. Challenge now is we can't find inventory and we got to fix her credit. So these are the things that we are dealing with every day. This is the real life shit that nobody's talking about on Instagram. And I should probably post all this stuff. But the point is that if you're fixated on a credit score, okay, the issue now becomes they're running and they're chasing a ghost. And The reality is I tell my team this all the time, a 640 is where they want to be. There's a reason why these wholesale lenders that have 20% of the United States market share have a cap at 640. If you go to United Wholesale Mortgage, they don't entertain loans below 640. Why is that? Okay, why is that? Has anyone really thought that through? The reason is because they're tiered pricing. There's tiered pricing that is involved. And so as a real estate agent, as a loan officer, we want to make sure that we understand, oh, you're tier 3. Okay, what does that mean? Tier 3 is not bad, but it's also not good. Tier 1 is going to be the best type of credit. Oh, but I'm looking for an 800. You don't need an 800. 720 is all you need. Okay, you never needed an 800. That's just, becoming ignorant at that point. You don't need that 800 score. The 640 is your benchmark. Anything below that, you're going to get taxed discount points. So there's margin that's embedded in all of this. So not to really try to teach them how to make sausage here, be very simplistic with the conversation. Hey, how are you? What's going on, Arkayla? Yes, listen, we noticed that you have a 640 credit score. We want to try to boost your score. There's ways to do that. There's what if simulators. You can pay off, XYZ debt. You can talk to your lender if they have this tool. You could go on Credit Karma to do this tool. Granted, that's a different algorithm. That's not what we pull. We pull from FICO and they pull from Advantage, but you don't need an 800. Okay, by the time you chase an 800, rates are going to be up, inventory is going to be harder. This is the type of marketing that we're pushing out to the borrowers that we're receiving. Okay, very important to educate and inform so people can visualize what they need to know in order to get to the finish line. We also go into down payment charts. All right. A lot of our down payment charts are important. People are very fixated, like I said, on 20%. That's their upbringing. Okay. It's their upbringing. It's their father, their mother, their grandfather, their aunt, their uncle. They're avoiding PMI. PMI is 100% tax deductible. Same with MIP. Who the heck in their right mind is going to liquidate 20% right now in a market like this? I couldn't tell you who's going to do that and who wants to do that. Now, from a seller's standpoint, you should do that to get it, to get that bid, obviously accepted. That's the hardest part right now is how do we get bids accepted? I'll go into that in a later on. But the point that I'm trying to make is that if they don't have the money, well, they don't have the money. Okay. And they don't want to necessarily put 20% down to make it look attractive to, the seller. Well, we ideally want to go conventional. So if they can utilize a conventional product, then let's stay conventional. And let's do 3% down if they're a first-time home buyer, or 5% down. All right. So these are things that we go over, but to visualize the down payment is important. We also put a clause on our emails and we say, look, this is only the down payment. Right? This has nothing to do with the third-party fees. Well, what are those? Taxes, insurance, lender fees, title fees, government fees. What are we talking? I thought it was only 3.5%. Here's a spreadsheet that we can, go through. We do what's called an itemized worksheet. We don't put a rate on there. That's illegal. And it's not a loan estimate. So these are only example spreadsheets to give them a visualization. But we put in there clauses because they don't want to take that to their significant other. And their significant other says, oh my God, 35,000 we need to close. This is an example. You wanted to see exactly what it would be for a down payment and all of the fees. Here you go. So you got to make sure you set that expectation. We do it through video. My husband's not with me. Listen, I'm sending you this. He's got to watch the video. Before you even physically look at that paper, it's got to watch the video that I created for you. So if you guys don't have video, do not send things over and do not have your lender partner send things over, because that's going to be, it's like you trying to regurgitate all of this to your significant other. It's over. That's not going to work. Okay. So we want to make sure that they have a reference. What's the reference? It's a video. A video is staying there. It's static. It's there. They can go back to use it as a reference. They can use the video to make sure that they understand it. Okay. Gift funds. I'm doing this all damn day. Yesterday we had 4 people or five people, I think. All of them need gift funds. Okay. one gentleman has the money, okay, but needs to pay his Amex off in order to get his score to above a 640. By doing so, he will not have significant cash to close, right? He's not going to have the money. So I said, look, do you have a mother, father, aunt, uncle, somebody who's, you know, well off that can gift you the funds, family member primarily? Yes, I do. Okay, so what do they do afterwards? We don't want to know. Okay, and that's illegal. All right, you can't say, hey, you know, get a loan and blah blah blah. It doesn't work that way. So ideally, you want to make sure it's a family member. They're not doing blood samples, so obviously, you know, it's got to be a family member. But if they need a gift in order to make the deal work, so be it. Ironically, one of the ladies on here, we asked that party that we needed to get a gift because they need to go $10,000 over asking price. So if nobody has the money to go over asking price at this point, let's get a gift. Okay. There has to be that creative outside the box thinking, because without that, we're going to lose deals. We're going to lose them by the dozens. I'm telling you right now. And the times of the $250,000 single family homes, they're gone. So now we're really extending the envelope here, and we want to be mindful of the fact that, look, if there's money laying around, let's ask. Oh, but I'm too prideful. I want to do things on my own. Listen, you got living parents. Use them. Okay, use them. They're here. Take that advantage, you know, if you can. All right. So gift funds are important. We educate a lot on gift funds. Sellers concessions. These are not really being utilized. However, I have 5 deals right now. 1, 2, 3, 4, 5. Yeah, we have 5 deals that all of them have issues. These houses are a disaster, but nobody cares, right? They're just selling them like hotcakes. Now we can't get financing with some of the stuff that's wrong with these homes. So a seller's concession is going to be utilized after the inspection, and we're getting them surprisingly. So seller's concession grids and cheat sheets like this that we have all through our resource center. This is important. This is extremely important because it educates the borrower, but not only that, it will set proper expectations. Now, you as an agent need to be very careful, because when you send this type of material out, let's ask for it. Let's do that. No. We're not. This isn't 2009 where foreclosures are a dime a dozen. We're in 2022. Things are different. You know, there's 33,000 people migrating here because there's no state income tax. COVID allows people to migrate here now. Mobile jobs, that's not going to happen. So I send these materials out to people that are in contract after inspections, so that way they can physically see. All right. Prior to all of this, we did it before. Okay. So as times change, we change our market and the way we target people. And it's interesting. That's the cool thing about controlling your marketing. All right. So seller's concession grid, there's always a way to physically get money out of a house. Now, here's another scenario. These properties are appraising over. So you could physically get a seller's concession over the appraised value. All right. It's the lower the less two, obviously the contract will be, but you could, hypothetically speaking, get that money. If it's a conventional loan, you're allowed 3%. So if the home appraises above, that's another way to get cash to close. So we just need to really be creative about the situation at hand, and try to be, you know, using our minds by trying to get creative on getting people to houses. 5 ways to accelerate your savings. We send this out, and this is probably, you know, very childish, because when I look at this, it's like, what the hell is this? Why would I want this as an adult? You're telling me how I need to manage my money. You'd be surprised, guys. Okay. The stat that I showed you in the beginning, 64% of the people are living paycheck to paycheck in the United States. That's real. And that's people that are making money. And you've got 48% right now that don't have a dollar, less than 3,000 to their name, yet they are making 200,000. I have people making 450,000 that have pretty much 10 grand, right? So that's the issue. All right. That is a person that's spending way too much. And I send these things out, but I am extremely tactful when I send it out. And I am very politically correct when I send this out. You never want to bash someone or undermine them. You're simply giving them tools to utilize to say, hey, look, and I do this with all of our clients too. We provide performas, which is a P&L. I do that because I'm a business owner. I have 3 businesses. At the same time, if this can help the individual out, like an expense, how much I make for revenue and all my expenses, that's awesome. That's probably what they need. It's an Excel spreadsheet. So we send this out and you'll be surprised. There's always a way to save money and cut costs. I just caught, I want to say almost $550, give or take. I have Vidyard. I canceled my BombBomb subscription. Don't need 2 things. That was $558 a year. And I cut another $550 for some leads that I was purchasing, which I don't need at this point. So there's always a way to micromanage. But this visualization that we hand out is something that I would use as an agent. We'll send that afterwards. Okay. This is what goes on when you physically sell stuff. I want to go into that in just a minute. So I had a VA. The gentleman had 4 kids. This was close to Orlando area. And it wasn't in Orlando. It was in Winter Haven. And this was about 2 years ago. And he sold his guns. And I was like, holy shit. I'm like, this guy, is selling guns in order to get down payment in order to close on his home. And he's doing this to provide for his family. I'm like, man, that's pretty motivated. And that gives me goosebumps every time I tell the story. The point I'm trying to make is you can sell things. We have a cheat sheet that you can go to our resource center. You can sell jewelry. You can sell anything. You just need a bill of sale. If you have all of that and you source and paper trail and document all of this, you can use that money. Okay. So that you'd be surprised how much you could make on guns. This gentleman made almost 10 grand on all the guns that he had. He's military, and that was his passion. That's what he collected. That's sentimental to that gentleman, right? But he doesn't care. His kids are everything. So these are things that we need to look into as a real estate agent. If someone only has 10 grand, hey, I got to ask you a question. This might be out of left field, but do you have anything you can sell? What do you own anything? Okay. So I know these are tough questions, but they're questions that we're overlooking. And if you really dig deep and people really, you really want to purchase a house, you could do it. Okay. So that's something that I always go into. If you don't want to ask the question, we have a cheat sheet on it. I would take that, download it, send it via email. That's going to inform everyone and easier to deliver the news. So MCC is our first time home buyer incentive program. All right. And this got discontinued, but also it is still in Broward County only. It's county by county now. And the issue with first time home buyer programs right now, currently in our market, is that they're capped at specific price points and loan to values, and especially debt to income ratio. And so we send this material out. However, okay, this is a way to engage with someone. And Florida Bond is a valid product that gives you $7,500, but it is slightly higher on the rate. So it's like a double-edged sword. Be careful what you wish for. Do you want the $7,500 and a higher rate, or do you want a lower rate without the $7,500? So these are ways to engage. These are ways to educate, inform clients. But there's also room to really tell somebody, hey, look, if you don't have the funds, there are down payment assistance programs that are out there now. You go to South Carolina, Georgia, North Carolina, inventory that is 200, 300, 400,000. These programs are going to be awesome. All right. But down here in Broward County and South Florida, very difficult. Okay. Very difficult, but possible. Okay. Program purchase, loan products, rates, payment. This right here is an example on a 30-year amortized loan amount product, conventional rate and payment. And I do this specifically so that people can understand that, look, when someone calls me up and says, all right, I need a payment to be near my rent payment, those days are over. I mean, it's very difficult to physically have someone have a $1,500 payment and get away with it. So if you look at this 30-year term right here, VA 4.625. This is an $1,800 payment. So I've had this happen two young gals, young ladies with their mothers on the phone last week. They are making about 50,000. They can purchase a home. They got immaculate credit, got about 50 grand in the bank, everything that you want on A paper, right? Problem is the inventory doesn't support what they're purchasing, and their rent right now is $1,400. My question is, where do you want your payment to be? I can't be over, $1,600. It's not going to be, but it's going to be probably around 1,800 or 1,900. So it's a tough conversation to have. I don't want to be that Debbie Downer to that person, right? But how do I really articulate that conversation? How do I set the proper expectations? We can add mom. Okay, mom's on the call, so we can add her. If we add her, that's a non-occupant co-borrower. I've increased your buying power. Now you can go to 350. Now you might find something you like as a townhouse. You're going to be over that $1,400 payment. That's gone. So this is the conversation that we need to have up front, rather than playing tour guide and having it later on. And having a lender pre-approve them with a rate is garbage, right? And not to bash a lender. I have a piece of paper with an interest rate on it and I'm pre-approved. Okay, great. What the hell is my payment? How much is my cash to close? That's the only concern people are going to care about at this point. Mind you, rates were 2.375. I was giving them out left and right. Now they're extremely high. Nobody cares about a rate at this point. You know why? Because I have about 4 cash out refinances right now that people are strapped, that they're trying to get out of debt. They have the equity. Your rate's going to be higher than what you have right now, sir, at a 2.7. I don't care. I need to get rid of this debt. Nobody cares. Rate is going to be a myth. Everyone will buy. They will always buy. All right. Rate will increase. Okay. And therefore decrease buying power. So that's a problem. But when you talk about them to the payment wise and what they want for a payment, this is the type of conversation you want to have up front. Now, how do you set up proper expectations without scaring them and spooking them? It's very difficult. We've got to motivate. We've got to think positive. We can't sound, so negative in the conversation. Like I'm literally sounding right now saying, man, this is going to be difficult. We just need to say, look, I know you want a single family. Are you open to these zip codes? Okay. We've got to get a bigger, radius. How about a townhouse? A single family home might not work. Maybe a villa or a coach home, maybe a condo if they have the 20-25% down, or mom's willing to gift them that money. So informing and educating so that their payment is still where they want it to be. That is the conversation that you and the lender should have together with that client. Do not say to me or even think about that's the lender's job. Bullshit. That's why you're losing deals. It's not the lender's job. It's not the realtor's job either. It's together. Do that together, because they're going to call you when they have a problem with the lender. They're going to call me when they have the problem with the agent. Let's go back and forth. They're going to gossip back and forth. We need to get everyone the same team here and literally collaborate together and figure out the issue. That's how you're going to convert leads. And that's part of the roadmap to homeownership, right? So what we do, and I'm giving you examples here, a rapid rescore. We'll do rapid rescores. They cost a lot of money. But at the same time, for me, spending $600 to $1,000 on a rapid rescore, I'm okay with that. Okay. I'm still making a profit. I'm not making a full profit. It's like you guys not making 3%. You're making maybe 1.5%, 2%. I'm willing to do that. If somebody is in need of buying a house and you can see that they're trying to provide for their family, I'm all for rapid rescore. So what does that do? That boosts their credit score. It allows us to use our algorithms to say, hey, we can boost Joan's credit from a 644 by paying her Visa off $500, and now it's going to go to a 682. So this will allow her to get better pricing, therefore less cash to close, therefore more aggressive rate, therefore higher buying power. So I'm creatively structuring in my mind. Now, this is difficult to do, obviously, if you've just begin the loan originating process. But, obviously, if you have someone who's a manager who could teach you all that, that's fine. Gift funds we're asking for every damn conversation. Even if they've got enough, I still ask for them because I want to know plan B. All right. Sellers concessions we educate on after we're going to have inspections. Single family townhouses, coach homes, villas, we educate on all of that. especially condos with deferred maintenance, paying off credit cards to enhance. We also educate on that, and then just getting paperwork submitted up front. Very, very, very important. All right. Our roadmap is similar to something like this, and it gives them a spreadsheet. So what we do is we basically guide them through the entire process and tell them exactly what they need to do from soup to nuts. And the concept here is that if they're not willing and ready today, they will be willing and ready maybe in 2 years or a month, or depending on the seasoning for the bankruptcy, whatever the case is. Everyone, like I said, is like a snowflake, to each their own. That's why when the neighbors say, oh, you got that? Yeah, man, I'm not you. Okay. I don't have a Porsche in the damn, garage over here. That's different, to each their own. Or it's my parents buying that in 1944. I mean, shit, it's a whole different market. So it's to each their own. So it's really need to understand that you need to make that call on that decision maker, and guide everybody through this roadmap. All right. But the whole concept of our roadmap to homeownership is to really give a visualization to that party to understand where they need to be. Now, I'm going to go into some stats and end it in the next 5 slides. This is very important. We've got an increase right now with the Home Mortgage Disclosure Act. There's a denial rate that's increasing, and we're getting many more denials. Nobody's really talking about this on social media, nor are they even posting it. But when I look at these stats, I look at the bad. I want to see what's coming, what I need to do to anticipate the tidal wave. So this is a staggering rate right here. Okay, now when you start seeing the forbearance foreclosures that are about to happen, this will that bring down the market? Not necessarily, but it definitely will have an impact, and this will go up a little bit. But this number is 21%. We also saw an increase in our loan size from 353 to 411, 400. That's a big gap. You've got agents working about 21 to 39 hours a week on buyers. Most of them are extremely hard to get into a house. 58% of the agents are literally in the office now. 28 are out in the field. So that's changing. 36 to 40 hours on any given client they're spending. So when you take those numbers, okay, and you take everything and you say, all right, the typical real estate agent per NAR loses about 25 transactions a year. That's a lot. That's a lead that you might have not even known you've lost. Example, case point, yesterday, all right, had a lead. Gentleman shopping 5 lenders, okay? He then said, yeah, I'm going to probably look in Orlando. This came from one of my lender partners here in Miami. Well, she's not going up to Orlando. So you basically told me that you're cheating on this person. You're going to get the information you need, and then you're going to go up to Orlando and buy. So I let the cat out of the bag. That's who I am. But at the same time, that's a lead that person most likely will lose. Never had it, but will probably lose it. All right. Maybe they'll find something that's a duplex for 400,000 in Miami-Dade. Don't know if that's going to happen. So good luck to them. But the point I'm trying to say here is that's 25 transactions per year that typical agent's going to lose. It's 1,000 hours that's literally gone. When you take that and you multiply that by the average loan size, it's $10 million in gross revenue, times that by 2%. Thus, you guys probably make 3%. It's almost $205,000 you're never going to see. All of this comes because our industry got regulated in 2009, yet everyone is still doing the same bullshit that I see day in and day out by throwing crap against the wall. They're doing the pre-approval process. Okay. They have their lender partners, but they're doing things very archaic. It's still a concern for me. Like I said, to each their own. But when I look at this stuff, we had 2 DMs from WhatsApp that I'm never on. Okay. Lost those 2 deals, right? Because I'm never on WhatsApp. We had a email that was sent to us, but I got that one because Melinda called and said, I have a refi for you. We had a couple phone calls, trying to look at my notes here. And we're trying to change the way that this industry is rendering services by having one call to action. All right. Instead of having all of this nonsense and applications and this and that CRM and this CMS system and the new app and the new social media app, and it's too much. It's way too much. When you look at all this stuff, what we do, all right, and what really helps a lot of our clients out is our short format. All right. And so this is AI at its finest. But see, everything that we went over in the beginning is all into this system right now. So all of the stuff that the consumer or you as a real estate agent is filling out on behalf of the consumer, I'm now getting that information and I can target that person, which is the snowflake. So whatever hardship they're going through, that is going to now target them, and it's going to allow us to understand that data in order to render proper services, in order to give them a roadmap. I don't want to hear we can't do the deal. I'm notorious I'm like the infamous guy that closes all of these deals day in and day out. All right. So we want to make sure that if you've got a challenging deal, I would challenge you to send it to me and I guarantee you I'll close it, even if it's already pre-approved. And you're just not going under contract. There's ways to get things done. All right. So I want to take the time and just show you guys. These are the questions that we ask. See, everything I talked about in the beginning is all here. This credit score, it's not the end of the world that they have bad credit. There's ways to get their credit better. If they pick these things, the next thing that we send them is the what if simulator. This is what we can do to enhance it. So instead of having them psychologically opt out and say, shit, we can't buy. I told you, honey, this sucks. They're going to be informed. They're going to say, oh my God, we have hope. We have faith. There is a way. That's the way we need to act. That's the way we need to be as a nation, and to really be informative and to care, as Melinda says, to give a shit, right? To say, oh man, these people don't have money. There's no way we're going to find them. They're looking for a $300,000 place in Miami. Good luck. That's not going to close anything. All right. We need to ask the right questions, and it all stems from data. It's the intake of data. This device is intaking data. As I mentioned, Alexa now linked to my TV, intake and data. Why is that? So they can market you. They can, get what they want. So in essence, we want them to get into a house, the borrower. So these are the questions that we ask. We have a buyer's consultation form as well. Okay. We have many questions on that buyer's consultation form we ask. If you're not taking a buyer's consultation form, 1% of the agents in America that are extremely successful, all of them do a buyer's consultation. Okay. And they ask those questions. These are the questions partially of what we ask. And so this is how we can target them and we can understand the analytics. And this is what it would look like on our side. So if you were to send us a lead or you were to buy into our services, this is basically what our roadmap would look like. And so what we are doing is we are scoring our leads and we are now saying, all right, now we know how to target, the highest, people that are having XYZ in credit scores, if they're above a 640, or if their income is above 7 figures, let's target them. Or if they're, below 7 figures, but their credit score is par. Well, let's, talk about possible credit restoration. So there's things that you can do now because you have the data in order to do it. Okay. And what did we do? We did nothing. We did no data entry whatsoever. We simply said, this is our call to action. Just like when you go to the doctors or the dentist or a restaurant, all of the call to action is the protocol of seeing the receptionist, seeing the hostess, going to the table, seeing the waitress or the waiter, getting served. I mean, there's service levels, right? But in our industry, like I said, just got regulated in 2009. Nobody ever bothered to even figure that one out yet. Just go to the bank and just get pre-approved. We need a letter and then we go find a house. It's not like that. It's way too complex. If that was the case, everyone would have a house. The way to understand things so you don't waste your time, because your time is all you have and you're going to drive yourself crazy, especially in this type of market, is doing the upfront work and understanding that, look, we can definitely help you out. Here's how. Here's the concern I have. Now I have a better approach on a buyer's consultation to say, hey, look, this is the roadmap that you need to go through. You just told me you had a 401k of 90 grand in there. Let's call Fidelity today. I'm not a financial consultant, but last time I checked, you could probably take out 10% tax free. Let's call them. Oh, I didn't know that. Okay, blah, 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 blah. So it's now you're building rapport, you're building hope. Okay. Very, 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 very important. All of the stuff goes to us, right? And when you send us a lead, all of the notes are here. So these notes that I have with all of the wonderful agents that send us business, God bless, we now know what the heck we're talking about. We closed the deal in 2020. We closed the deal in 2021. Why aren't we closing XYZ in 2022? Q1, 2, 3, and 4. Like, where are we exactly? Why is this prospect leaving us? What happened here? When agents send deals to lenders without a roadmap, where the hell is that lead going? Like, who's talking to that lead? You texted that lead, or they're going to call you. I mentioned your name. They're going to call the loan officer. No one's calling anyone. That data is gone. You'd be lucky if they call you. Right? They're on Google. They're doing their search through Zillow and Realtor.com. All of this facade about controlling the lead and not having them go to Zillow, by you sending it to an agent, or me sending it to, or you send it to a lender partner, it's getting lost. All right. And so the notes are not there and the data is not there. So the way, and the proper way to send your lender partner a lead would be through an intake form. If they don't have an intake form and you guys aren't using us, which is fine, then set something up, set maybe a consistent form of action. Maybe you make a conversation with that person right there on the spot, and they do, warm calls like that, and you guys are both taking notes. That's a great way. We used to do that. And that way the synergy's there, the report's there as well. All right. This is our resource center. This is all the cheat sheets that you guys were mentioning. So if you want to go to this, our form is here. Also, you can go to our website, www.tagteamnation.com. There's over 154 articles that we've copyrighted. There's a lot. Okay. There's a lot, but this is a very good way for a veteran or a rookie agent to really brush up on the guidelines. Okay. Why would you want to know this, man? You don't want to be a jack of all trades and a master of none. You want to know everything. Okay. You want to know everything. They just talked about rent restrictions for landlords in the next 60 days. That already passed. I'm going to make a cheat sheet on that. That's awesome information to have. This information is how we can understand that we are doing our fiduciary duty. We are the professionals. They can take our advice. They can listen to us. They're following us. We're leaders, right? So we need to lead them. By you not knowing any of this stuff, well, that's the lender's job. No, have them go to our resource center. You can educate them, or you can educate yourself to educate them. But this is the point of the resource center. It's free, doesn't cost them money, and it's extremely informative. All right. These are the lead forms that we have, and we pride ourselves in this. This is free. These ones are subscription based, but this right here is the only way that we will take a lead. We will not take a lead anywhere, anyway else. It doesn't. In fact, we just had a conversation with a new agent. I got her on a Zoom meeting and we said, this is the way we render services. And it was funny because this is a true story. The person that she sent us via text message, okay, called us right after, because she made that introduction. A whole week went by and then he sent documents. The whole week, that you're losing altitude. That is not good. As we say, time kills deals on our short form lead. A week is no good. A week is way too much information, people talking to them, negative crap on the news, not good. You want instant gratification. That's what everyone wants right now. They all want to be Kim Kardashian today. How do you do that? Short form, render services right there, 15 minutes, instantaneous, right? It's very quick. And now we can educate the borrower to say, hey, we need XYZ documents based on your criteria. So now I'm getting what I need faster. So now I can render a decision faster. And obviously that's why fast food chains work so well. I don't eat fast food, but people want fast things. So this is key. Okay, I would definitely download that. These are a lot of our agents that we do business with. And we take pride because a lot of these agents have scaled their business significantly, especially Kashana. She's tripled her business. The reason why, I'd like to say, partial reason, she's very inspirational. She was ex-president of Women's Council. If you don't know who she is, I would follow her. She's awesome. All of these ladies are wonderful, wonderful ladies. But the point I'm trying to make here is that we do a weekly meeting with her. In fact, tomorrow we're meeting and we're going to go over her pipeline. All right. And so that's important to do that. So I understand if she had that conversation, that's part of the roadmap to homeownership. We're guiding XYZ client. Where are you with the process? Did you call them? Yes, I did based on my notes. Okay. How did that conversation go? They're a little bit hesitant, Anthony. The father needs a conversation. Okay. I'm going to call the father today. So that's the part of why we're losing deals. There's a disconnection on the way we're rendering services. And I know this sounds a little bit crazy, but at the end of the day, I think I'm getting to a lot of people, and it's understanding that, look, he's right. He's right, because at the same time, there's no reason why anyone can't do volume like these ladies are doing. They did 20 million last month. Okay. They're rocking it based on our systems. Okay. We have a virtual assistant company, and I'm not here to solicit services, but I am getting a ton of agents that are doing a lot of clerical work. My VAs are tech engineers for HubSpot. They're not some clerical worker that is some Joe Schmo. These ladies speak multiple languages. They have 4-year degrees. They're a blessing from the Lord above. And I mean that with the bottom of my heart, man. Like, these ladies rock. And so they've done a lot for my 2 companies. In fact, they're the ones that help build Damage Control. If you have not followed Melinda and myself, so if you do need services, we have 15 individuals that would be more than happy to help you out. We just helped out Phil Calloway, YPNer. He was paying $650 for IG posts. Don't know what the hell he was paying for. We don't charge that. That's crazy. That's a lot of money. So whatever you need help on, you can go to that service and look that up. We are also certified partners with HubSpot. So if you don't have a CMS CRM system, this is something you need to understand, that this is the future, folks. If you follow me on Instagram, this is all I pitch, because this is it. All right. Nobody is going to be with their same career for the rest of their life. If they are, they're going to mold and shape themselves throughout that career, right? You have to adapt in the environment. The system allows you to do that because you own the data. So you're target marketing that data, and you're allowing yourself to send your brand out, what you want to present, right? Not what KW wants or EXP wants. You're the brand. And so this is very important to understand, that this device is a CMS system. It's a customer management system. And this is what a CMS system does. It's a content management system that you are allowed to own your content and allowed to market your own content. That's what we do very well. And if you need help with that, we can do that. If you have not followed Melinda and myself, this is our link to Damage Control. This is our series of events. It's just one podcast a year last year, and we just got this year Educators of the Year. So it is helping a lot of agents out, which is cool as hell. A lot of good content. And if you need a good title attorney, she is amazing at what she does. And that's it. I hope I touched a lot of your challenges that you guys are going through. Any questions or concerns, do not hesitate to give me a call. Or shoot me a text message. That's the best way to reach me, text or call. I'm a talker, obviously. And that's it. Any questions you guys can answer or ask right now. Other than that, I will send you material, and that is it. No questions. Allowed to talk. I don't need to do that. Okay, cool. All right, guys. Thank you so much. Appreciate it.